In today's video, I'm going over the loan estimate section by section. So if you do have a loan estimate, please get that handy before I start, and then you can follow along. My name is Duane Vizinau. I'm a national wholesale lender and a certified government underwriter. Let's go ahead and get into it. Now, the first section I'm going to go over is on the upper left side, and you can see that it says loan estimate. Okay, so you can see here it shows the date issued of the loan estimate, the applicant's name, that would be your name if you are the applicant, the buyer on the loan, and then the property address as well as the sales price. Now, if this was a refinance, it wouldn't say sales price, it would say appraised value. Now, the next section you can see is on the right side, and this is important, is that you're going to save this loan estimate to compare with your closing disclosure, and you're going to do just that when you get your closing disclosure. And I do have a video that's explaining the closing disclosure for you to watch as well. So here you can see the loan term is a 30-year. The purpose is for a purchase. The product is a fixed rate. If it was an adjustable rate, it would say adjustable rate mortgage. Then the loan type is conventional. And then also we have our loan number, which is right here. Now, this is important section right here, the rate lock, yes or no. Now, if you are speaking with the loan officer and they tell you that your interest rate is locked, then this box right here should be checked yes. Now, this is for you to confirm whether the loan officer is giving you the correct information or not. And again, if it is locked, it would say yes. So on to the next section, we are on to loan terms. So here we have our loan amount. And we already know our purchase price, which was $500,000. So this is our loan amount against that $500,000, and we are at $400,000. This is the interest rate, and again, it's not locked. So this was the rate on the loan estimate reflected. This is your principal and interest payment, not taxes and insurance. We're going to go over that in the next section. So just principal and interest of your mortgage payment is this 265852. Then if there was a prepayment penalty, and we are doing a conventional loan, so conventional loans typically do not have a prepayment penalty, but if there was a prepayment penalty, then some information would be displayed here, as well as the balloon payment if there was a balloon payment. Projected payment. So here you can see what your projected payment is for the next 30 years. Now, if this was an adjustable rate and it was a 5-year, it would say 1 through 5. But since this is a 30-year loan, it's going to show 1 through 30, meaning that your payment is not going to change as far as the principal and interest. That does not change at all. On this loan, since we have $500,000 purchase price and then $400,000 down, that's more than 20%. That is 20% exactly. So then that gives you no mortgage insurance on this loan, because if you put down less than 20%, then you're going to have mortgage insurance. So here you can see the estimated escrow payment. So these are the taxes and insurance associated with your mortgage payment. So on this one, you can see your estimated total payment included principal, interest, taxes, and insurance is $3,325 a month. Now, this section here is going over the taxes and insurance. And you can see this is the monthly payment for the taxes and insurance, $667. Now, this is an important section. This lets you know if your taxes and insurance are in an escrow account, meaning every month that you make your mortgage payment, your taxes and insurance, will also be paid. So if this says yes next to in escrow, that means yes, you have an escrow account, and that means your taxes and insurance will be paid every month as long as you make your total mortgage payment. If it said no, that means you do not have an escrow account, and that means that you would have to make separate payments. Now, the next section is the cost at closing. So we're going to get into the total closing costs, but this section just gives you an idea of what your closing costs come to, and it is an estimated cost. And this is important. We're doing a loan estimate. So the word in itself, estimate, means that it is not the final figures of your loan. This is strictly an estimate, meaning that the numbers can and most likely will change. So your estimated closing cost is $27,297, and the estimated cash to close, this is with the down payment and closing costs, comes to $126,497, $126,497. Before we move forward, if you are seeking to get pre-approved, I would love to assist. You can scan that barcode right there on the screen or go to my website as well as the link within my bio. And I've mentioned this before in another video that I prefer to do Zoom calls when I go over loan estimates because we're talking numbers here, and this is where individuals have some concerns and have a lot of questions. So it just makes it easier for both parties, for myself and for you, because there's a level of transparency there. You can see my screen and exactly what I'm discussing. So if you are seeking to get pre-approved and would love to work with a loan officer who will take that time and spend that time answering any questions, go ahead and scan that barcode, go to my website, and I'd love to assist. Now, the next section is the loan cost. Now, this is where you're going to really compare with lenders because lenders have the most control of Section A. And this is going to tell you if there are any points being charged or not. So if your lender is telling you the interest rate that you're receiving has no points, then this section should be 0. So I did reflect some points on here just to give you an idea what it looks like. 1.5 points on the loan amount of $400,000. That comes to $6,000. Now, there are fees that are applicable, and these are usually associated with the bank lending institution that we choose as wholesale lender. So we're not the bank, we're, a third party who has relationships with lending institutions. So those lending institutions will have an underwriting fee or what's called an administration fee. And you can see that right here. Now, this again is not a fee that me, myself, as the loan officer is charging. This is the lending institution, the lender that I have selected, to move forward with the processing and closing of your loan. Okay, now on to Section B. And you can see here it says services you cannot shop for. And cannot means that the fees here are standard fees. You cannot search to see if you can get a lower fee anywhere else. This is the fees as far as the appraisal fee you can see, which is $800. Then you have your credit report fee, flood certificate fee. This is to confirm if your property is in a flood zone or not. This MERS registration fee, the processing fee, tax service fee. These are fees to help process and lender fees associated with the appraisal and credit report. So again, these are services you cannot shop for and are part of your closing costs. Section C. So these are services you can shop for. So when you look at this, this is a section where you can shop to see if I can get a lower cost on all of these fees. And you can see all of these are title fees, right? So this is our fees associated with the title company, which in most cases, 99.9%, the listing agent chooses the title company. But again, if you feel like these fees are inflated, or if you have a relationship with the title company, or you feel like you can get a discount, once you get this loan estimate, you can take time to go and talk to other title companies and see if they offer lower costs. And then you can bring that back to the lender and they can work on your behalf to try to see if the title company that we are using, that again was selected by the listing agent, would match these fees. And if not, can we switch title companies? And again, these are all title fees associated with the title company to help process your loan. So Section D here, you can see is just the total loan cost of what we just went through, A, B, and C. And those are just accumulated together to come up with the total cost of $13,206. Now we're on to other costs, and you can see here we're on to Section E, taxes and other government fees. These are pretty much government and tax fees. If there's a transfer tax fee that the county is charging for transferring the taxes from the seller to you, and then the recording fees of all the other taxes. So these are just applicable, again, taxes and government fees. Now, this section is where the numbers can definitely change, especially on a loan estimate. And this is going to be determined on, you can see your hazard insurance. So Everyone has to pay 1 full year of your homeowner's insurance upfront. That's to make sure that the home has insurance for the next 12 months. Now, on here it's called hazard insurance, but another term for it is homeowner's insurance. So this is 12 months, and this is going to be based on the quote that you provide. So most individuals, what they do is they contact whoever they have their auto insurance with to see if they offer homeowners insurance and do a bundle to get a discount. But this number on the loan estimate, we typically just use what's a 0.35 factor on the loan amount. And that's how we come up with an estimate of what your homeowner's insurance will be. But once you provide that quote to us and we know exactly how much your premium is, that's going to change to whatever that premium is for the total year. Now, this section here, the prepaid interest, and this is again where this is determined based on the day of the month you close. So here we have 7 days of interest that you have left to pay in the month. So this essentially means, let's say there's 30 days in the month and you closed on the 23rd, and there's 7 more days left in that month, but you took ownership on the 23rd day, meaning that you have to pay interest for the remaining month. Now, this number can significantly go higher if you close on like the 3rd day of the month, because then you have 27 days of interest. So beware of that, depending on how much funds you have for closing, and determine when is the best day for you to close to save some money. Because again, the day that you take ownership of the home is the day you begin paying interest on that home. Section G. So this is where we were discussing in the beginning of the video on whether you had your escrow account, and it was checked. Yes, you do. So since you do have the escrow account, that means we have to collect to put the funds in the account to pay for your taxes and insurance. So essentially, it's just not money that's given to you. These are part of your closing costs, and you are just prepaying your taxes and insurance upfront, essentially. And these funds go into account. This total amount of $2,000 will sit in an account, and should your taxes and insurance become due or increase, they're going to pull from this account. So this is your monthly payment that came to the 667, and we are collecting on this one 3 months for each. Now, this number can change depending on the month you close as well, and that can change your loan estimate. So let's say this month was, just for an example, was May, but then you closed in June, and that can change the number of months and increase your closing costs. So just be wary of that when you look at this loan estimate, and know that based on the month that you received this loan estimate, that this can change should your close of escrow date extend or not. Okay. Then the next one is right here. Now, this is important. This is your owner's title insurance. And you can see that it says optional right here. Now, it is optional, and I've never had anyone waive this. And this, I don't suggest you waive this, because this is to safeguard you from any errors or any individual coming after you've purchased the home stating that they are the rightful owner of the property. So this guarantees that you are the rightful owner of the property. And if there are any legal fees, if you had to go to court for this, then this fee covers all of that. So never waive this. I don't suggest this. It does say optional, but in the long run, should anything like that occur, you'll be safeguarded. So that is a title fee as well. On to the next section. So section I is the total cost of everything we went through, E, F, G plus H, and it comes to 14,091. Okay. Now this is your total closing cost, because you can see on the previous slide, there was a section D and a section I, which was all of these sections. Again, this is section I, E, F, G, and H is here for I. And then the other one was A, B, and C came to D. Now, both of those together comes to 27,297. That's the total of your closing costs. Now here, if there was a lender credit and your lender stated, yes, we're going to give you some lender credits to cover some of your closing costs, then it would be right here. So that's how you can confirm whether or not you really got some lender credits. calculating cash to close. So here is the total closing cost, and it came to, again, $26,497. This is if you had any closing cost finance, and this would be applicable if you did like an FHA loan. You would see something here, or even VA. Most government loans would have something associated to this section. This is your down payment of 100,000. Again, it was 20% of the 500,000. Now, if you did an earnest money deposit, that would be reflected right here. Most cases on purchases, you have to put an earnest money deposit, so that would be right there. Funds for the borrower, that would be if there is, let's say, like a down payment assistance or a grant actually, something like that would be right here. If there's a seller credit, this seller guaranteed to give you some credits, that would be on this section. And adjustments and other credits would also be here if there were some other credits associated with the loan. Now we're on to the comparison section. So you can see on here, in 5 years, this is the total you will have paid in principal, interest, mortgage insurance, and loan costs is $173,261. Now, the amount of principal that you would paid out of this $173,261 is $23,514. So that gives you an idea in 5 years, how did my loan perform associated with my mortgage payment? Now, this section, the APR, this is how you know how much you're paying in fees. So your total cost over the long term expressed as a rate. This is not your interest rate. So your interest rate, remember on this one, was 6.99%. Now, anything above that is calculated as a percentage. And as far as your total cost, your closing costs, and that is why this is, we'll say it's 0.276% higher than the interest rate, meaning that 0.276% is your closing costs as a percentage. So this is how you can know if you are really getting a no-cost deal. If somebody tells you it's a no-cost loan, then this number should match your interest rate. If it doesn't match and it's higher than the interest rate, then that's not a no-cost loan, because the costs, again, are associated, or a percentage on top of the interest rate. So this is how you can compare and know which lender is charging you more or not. Simple. Then this is your total interest percentage that you're paying over the loan term, the full 30 years. You are paying 139.4% in total interest paid over the life of the loan. All right, now let's go over some things to avoid while you're doing this. So only comparing interest rate. So interest rate is a great way to 100% to know, your payment and whatnot, but it doesn't tell you whether or not you're getting the best deal. You want to look at that APR, like I mentioned. That will tell you if you are paying any costs on top of the rate, and that's how you can compare. Also, you want to look at that section A, and if there's any points associated with the loan, then that will tell you and help you compare with other lenders. Ignoring closing costs and fees, you don't want to ignore that. You want to make sure that everything is spelled out and is according to what you were told you were going to receive. Not checking cash to close. You want to make sure you look at your cash to close, and not understanding the escrow and prepaid, because both of those are more than likely going to change on a loan estimate, because you may close a day early, which would change the prepaid amount, or 2 days late, or a month late. So that's going to change your prepaids. And then your escrow is going to change based on, again, your homeowner's insurance premium quote that you provide to the lender. And then once the lender confirms your actual taxes, property taxes on the property, then that can also change. So you want to really pay attention to these escrows and prepaids, because those figures can 100% change. And the lowest rate does not mean the cheapest loan. Look at the entire picture. When you're out there and you're trying to compete or compare lenders, and your only question is, what is your interest rate? Well, that's not going to help you. ask for a fee worksheet or a loan estimate, and actually a locked loan estimate, because until your interest rate is locked, anything can change on the loan. A real comparison will be a locked loan estimate, and you can see that as long as that section shows locked on the loan estimate on that first section. There you have it, the loan estimate. I hope this helped you out if you have your loan estimate. Also, you can scan that Zoom barcode if you do have a loan estimate and would like me to go over that with you to make sure that you are getting the best deal. This is, again, how you can compare with lenders. When anyone comes to me as a loan officer and says, hey, can you beat this lender? I need a locked loan estimate. I don't go over conversations or what the lender may said. A locked loan estimate is how you can compare and make sure that you're getting the best deal. So feel free to scan that Zoom barcode. And always, please like and subscribe if you feel the information was useful. And I'll see you on the next video.